I want to be free to pursue in the moment whatever I find to be of the highest value. And sometimes that's the business, and sometimes that's family, sometimes that's this other thing, like whatever. I don't know where my whimsy is going to take me, but I want to be free to pursue it when it does appear. And real estate is a way of taking chips out of the business and putting it somewhere safe where I know I'm going to get good tax treatment, I'm going to get good appreciation, I'm going to get cash flow, I'm going to get all those things. But I'm going to be able to continue doing what I do, knowing that that's my safety net, that's my foundation.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. Hope you're having a great day. We've got another great guest joining us today, Anthony Vicino, joining us from Minneapolis, Minnesota. I'm going to read a little bit about him, then we'll bring him in. Really excited for this episode. I've heard him on a lot of other podcasts. And just some really good stuff. You're going to learn a lot today. So Anthony is a best-selling author. He's a real estate investor and a serial entrepreneur committed to helping people maximize their return on life. He is the co-founding partner of Invictus Capital, a multifamily acquisition firm based in Minneapolis, Minnesota, with $60 million worth under assets under management. As the host of the Multifamily Investing Made Simple podcast and author of the Passive Investing Made Simple book, Anthony firmly believes investing shouldn't be complicated, scary, or overwhelming. We're going to jump into that a lot, but Anthony, first of all, welcome to the show. Thanks so much for joining us today.
Yeah, dude, it's good to be here. I appreciate you having me.
Yeah, really excited to jump into a bunch of things, but Anthony, if you don't mind, kind of take us back. Where were you before you were investing in real estate? Because a lot of our listeners probably are where you were then. They're doing something else and maybe just getting started with their interest in real estate. So let's go back there for you so they can kind of relate to you on that level. And then we'll walk through your journey a little bit. And maybe to start, Anthony, if you don't mind, I see the stuff you put out on LinkedIn and whatnot and really good stuff. Do you mind if I read a recent LinkedIn post that you did?
Yeah, absolutely.
Yeah, really fascinating. I've heard this story before, but this will kind of set it up and I'll let you take it from here. But you wrote, 10 years ago, I was living in a van parked behind a climbing gym in downtown Oakland. Every night I'd lay down in the back, staring up at the ceiling and playing over and over in my mind all the ways I had royally screwed up. I was alone in massive amounts of debt. And most importantly, I had absolutely no clue what to do next. If you're in a similar place in life, discontent with your status quo, then you should check out the video we just made. So we'll put that link in the show notes and you guys should check that out. But Anthony says, in it, I share exactly what I did to go from that rock bottom place, drowning in $80,000 worth of debt, to a millionaire in only 3 years. That's awesome, man. Well, I just can't imagine a better way to set it up, Anthony. So I just wanted to read that, but maybe I'll let you take it from there. Give us a little more color as to where you were. And then, I'd love to get into the skinny on the 3-year journey. What a turnaround that was.
It's always interesting. Like when you come on podcasts, people like to read off the bio and it's like all the wins, like all the successes, like look at all these cool things you've done. But the truth of the matter is, like, I believe that you fail your way to success, and it's a long journey. Behind, they say behind every overnight success, there's 10 years of hard work. And so for me, like that van is really interesting because that was like, if you rewind, I was about 28 years old at that point, and I'm about 38 right now. So my early 20s, I really, really struggled because I have severe ADHD, and I can use that as an excuse, which these days it's more of a superpower. But in the past, I didn't understand how to work within the parameters of my own biology to be able to focus towards a goal and make meaningful progress. And the way this really manifested itself was I struggled like all the time against what society expected of me. So I struggled in school. I was a really bad student. The only reason I passed school at all, college, was because I can take tests. I test really well. But besides that, like, I was a complete failure. I had like dozens of jobs all through college and through my mid-20s. And like, I would hold them for about 3 to 4 months before I would get fired. And so like, this was the recurring theme in my life through my 20s. And it came to a head when I was 28. I tried to marry this woman, and her parents looked at me and they're like, how are you going to provide for our daughter? And it was like this first moment in my life where society's expectations, like I could no longer juke and jive around it. I was like, okay, I got to step up and figure out a way to make something of my life. And so I started at that point writing science fiction and fantasy novels. And about a year later, her and I ended up breaking up. And when we broke up, she was like, I want you out, and I want you out quick. So like, that's how things go when you like break up. It's like, let's get this done. It's
kind of all or nothing. Kind of all or nothing.
Exactly. So, so suddenly I found myself like, okay, what do I called my dad like the day that she called and was like, this is over. I was like, Dad, what do I do? I got like $1,000 in the bank. Like, what do I do? And I was living in Berkeley at the time, which is very, very expensive. And he's like, well, I don't know. Like, we started brainstorming. And he's like, well, why don't you just buy a van? You live in the back of a van. Like, people talk about that all the time. I was like, okay. So I bought a van and then parked it in the back of that climbing gym. And honestly, like, that's the rock bottom moment. But the truth is, like, that was a really good thing for me, because rock bottom, when you hit that, like, you have nowhere to go but up. And so you're willing to try things that up to that moment, maybe you were hesitant to do. And I think that's a much better place to start the hero's journey, rather than, I think much harder for people is like when they have a pretty good life, right? Like, good is the enemy of great. You hear this all the time, where it's like, I have a good job. I like it. I don't love it, but it makes good money. And then we have this house, we have the kids, and it's good. Yeah. Life is good. That's way harder, I think, to break out of. Yeah. And so for me, my story, I start the story from the back of that van. What got me out of it was small businesses, like starting my own business, window washing company, which up to that point, like I was not entrepreneurial. So like this was the furthest thing from my comfort zone, but it was something that a friend invited me along on the journey. And I was like, okay, I got nothing to lose. And on that quest, I discovered like not just how to build a business, but how to build a life around myself. Because like the things that I needed to succeed in business were also the things that would allow me to succeed in life, like structure and discipline and like building skills. Like these were all important, not just for the business, but for me. And over the last decade, that's just been kind of the running theme, is building businesses that I love. They're a lot of fun, like bringing value to the world and being compensated for it. That's fun. Like that's really, really awesome in a way that like working for other people when I was young just never was. And then real estate was just a manifestation of that. So along the journey, I had a mentor who was like, hey, you're making all this good money from these businesses, but you need to be, acquiring assets, because if you don't do that, then regardless of how great you are at business, like you're always going to be tied to them. And so it was about creating assets and like taking this cash generating machine and buying cash generating assets. And so I started with a triplex that I bought for $7,500 with an FHA loan. I house hacked it. And then 9 months later, it appraised for $125,000 more than what I paid for it, which sounds really, really cool. Makes me sound like a genius, but I really didn't do anything. I just got lucky, like right place, right time. And so then I took that and I started rolling it forward with a refinance at the next building. And somewhere along the way, like that journey started in 2013, 14. In 2019, my partner, Dan Kruger, and I, we formed Invictus Capital. And that's when we started syndicating and bringing in other people's capital. So for 5-6 years, we had been paying our tuition at the School of Hard Knocks with our own money before we started raising capital. And in the last 3 years, we've raised about $25 million and acquired around $70 million of assets. And it's been good. It's been a long, convoluted journey getting out of that van, but here we are.
Well, there's some great stuff. I mean, I'm just thinking back to when your girlfriend's parents came to you and said, hey, how's this actually going to work? Like, how are you actually going to support our daughter? Your realization there, I think people come to that at different spots. Sometimes people have kids and they start to think, gosh, like, how am I saving for my kids? But there's some realization that goes, man, like I've got to start thinking about things differently. Also love your dad's advice. I'm just like thinking ahead, like as you're talking, I'm like, man, I wonder what his dad's going to say. I mean, so many parents, Anthony, don't you think like, hey, move in with me and hey, here, we'll do this. We'll loan you some money. And like your dad said, go live in a van. I mean, I think that's pretty awesome. Like, dude, you don't have any money. I mean, what do you, I'm not going to give you money. I'm not going to help you out. I'm not going to and it's not like he asked you to take your wife and kids and put them out on the street, but he did, tell you like, dude, go rough it, man. That's where you're at. That's where, your decisions have led you to this spot. So I think that's great. And like you said, I mean, it's like your dad allowed you to hit rock bottom and then allowed you to build from there. Michael Blanc is one guy that said like, until your situation's unacceptable, you'll keep doing it. And so many people are like that in a job, as you were kind of saying, where it's not good. They don't like it. Maybe they kind of hate it, but it's not unacceptable yet. And so you got to a spot that was unacceptable and you started working your way out of that.
I want to go back real quickly to my dad because I don't have kids, so I can't give any kind of parenting advice, but I think my dad is really interesting. And like a lot of the success that I've had in life, as I look back, I can now attribute undoubtedly to lessons that he taught me or that he allowed me to go through. Like he was always the safety net. I always knew he was there. Worst case scenario, he would have me, but he was prepared to let me fall very, very far before he reached out to grab me. And a case in point, when I was 16, we were in Minnesota at high school, and I was dating this girl who lived on the other side of Wisconsin. And I wanted to go to this formal dance with her. And the night before the dance, we had this hellacious snowstorm, icy roads the whole way. And it's about an 8-hour drive.
Yeah.
I'm not like put off by this because I'm like a 16-year-old boy. And I'm like, I'm going to get there.
Sounds like an adventure.
Yeah, it sounds awesome, right? To me, my sister is going on the trip with me. We're going to go for the weekend. She's driving, and we wake up early, and we're on the road. And about 4 hours into the trip, we hit a patch of ice going 70 miles an hour, and we slam into the back of a car who had slid off the road in the same spot that we were sliding, right? Car totaled, absolutely cracked in half like an egg. We're taken to the hospital. Everybody's okay. Like my sister has some bruising from like the seatbelt. I have a mild concussion. And my dad and my stepmom, they come out and they get us to collect us and take us home. And I was sitting there with my dad. I was like, Dad, I told her that I was going to be here for this dance, so I have to go. And he's like, well, okay. Like, what are you going to do to get there? I was like, well, I have $150. He's like, cool, let's get the phone book out. Because this is like back in the phone book days. He's like, let's get out the phone book. He's like, maybe you find a taxi or a limo service, or maybe there's a puddle hopper that's like flying over there, like brainstorming all the different solutions. And he ended up leaving, and I hadn't found the solution yet, but I knew I could do it because he believed that I could. Like, in that faith build the confidence to see it through. And sure enough, and a nurse overheard my plight, and she's like, hey, if you can wait until I get off my shift, I'll drive you there. I was like, 4 hours? She's like, yeah, definitely. I was like, awesome, let's do it. So I got out there, made it in time for the dance, and then I took a train home at the end of the weekend because that was like the cheapest way I could get home. And so like all that's to say is you don't lack for resources, you lack for resourcefulness. And I think as a parent, like the key is that you only instill resourcefulness like when your back's against the wall and you have no other choice but to solve it. And so I just wanted to give that little shout out to my dad because growing up, I definitely didn't give him enough props.
Oh man, no, that is awesome, Anthony. And I mean, my wife and I have a couple kids and are constantly talking about that in a first world country, in a country like America. I mean, most kids really, we could give our kids just about everything they want, certainly everything they need. And just thinking about like if it were actually our kids, it's easy to say like, oh man, I'd let that kid just sit out there and tell him to live in a van like your dad did. Or you want to go to dance, get there. But it's really hard when it's your own kid. And I love that you said like your dad had that safety net, but it was just a lot farther down than I would say. Probably, honestly, man, from what I'm seeing as a parent and amongst other parents, like probably farther down than 98% of parents. But again, maybe that's why you're more resourceful than 98% of other kids. I mean, maybe not. There's other factors, but that's awesome. And I think it's so true. I think the way I would think of it is like that safety net. Part of that is just love. Like your kids definitely need to know you love them no matter what.
Well, I was going to say it's so interesting because like for me in those situations, a big part of the confidence, like whenever you're doing anything, if you're investing or you're building a business, you're just starting off on this journey, is like you lack a lot of confidence or belief in yourself. So in the beginning, you almost have to steal it from the people who believe in you. You're like your mentors, your parents, or whoever, like people who are further along, like, I know you can do this. And you almost like steal that belief until the belief in yourself becomes strong enough that you can hold on. And for me, like in those moments in my life where my dad just left me hanging to figure it out, I knew that I could do it because I knew he believed I could do it. Even though I didn't necessarily believe I could, I was like, he wouldn't leave me here if he didn't think I could figure it out.
And if he did it for you, Anthony, he would give you the exact opposite belief.
100%. 100%.
Right? Yeah.
I couldn't do it. Yeah, exactly. And then here's the other part that as a parent that you have to be cool with is like my dad was just as proud of me in that time of my life when I was living in the back of the van as he is now. Like multi-millionaire stat. Like he's like, those things don't matter. Like the way he would talk about it with his friends or with the family and everything is like, living in the back of the van for him wasn't a low point, right? It was just another step in the book. Yeah. And it was just as important as every other step or every other chapter of the book. And I think sometimes we lose sight of that.
Yeah. Oh yeah. Very easy to do. Very easy to do. I mean, you know that raising kids is a long-term. I mean, you talk about, multifamily investing is a long-term investment. I mean, kids, I heard somebody explain it that way. Like, it is the quintessential long-term investment, especially when you start thinking about, like, you see no benefit, like no reward.
What's the payoff?
Nothing, there's nothing. And then finally, maybe when they're 25, wow, okay, they're on their own.
Little, they love you unconditionally. And then you're going to go through a phase where they want nothing to do with it.
Oh yeah.
Like, okay, well, we'll just have to wait this out and hope it comes back around full circle.
Yeah, that is so cool. I appreciate this conversation. This is, I really like to focus on family in this podcast as well. And this is an awesome conversation because, my wife and I really want to do our business with our kids and teach them certain things. And that's, resourcefulness and gaining their own confidence. Just couldn't agree more. I mean, even with our kids being young, like my son doesn't like going to school, and my wife and I talk about it. And she was raised a little bit differently in that, like, her mom would swoop in and do it for it. And she realizes now, like, that taught me I wasn't strong enough. I wasn't brave enough. I wasn't, because like, that's just what unconsciously, again, mom has a heart of a gold, and she was not trying to teach that lesson, but absolutely it's what it taught her. So we're trying to, with our son, like, just talking to him, hey, how are you going to, you're going to be fine. How are you going to do it? How are you going to overcome this? How are you going to do it? Because you can, and so hopefully we're teaching that. So yeah, really good stuff.
This is a lesson that we apply now at Invictus, like with our property management, and with, we have probably like 10, 12 employees. Right. And if you guard them and you protect them and you don't give them the belief in themselves that they can find the solution, like, you don't just, put them out there and say, you can do this. Like, if you keep swooping in to fix it for them, then you are always going to be the linchpin, the thing that's holding back the team. And they're never going to have the full confidence to go out there and crush it. And so, like, whether we're talking about family, we're talking about business or investing, like, the ability to surround yourself with highly competent people and then trust that they can get the job done without you swooping in, because multifamily investing, this, it's a people thing, right? Like, it's no single person does it all. And so your ability to realize success as an investor is predicated on how well you work with and through other people. And so it's a skill that is super hard. I'm still working on it. I don't think anybody ever masters it, but it's one of the most important ones for sure.
Yeah. Tim Ferriss, I think at the 4 Hour Work Week, he talks about, like, that you can be a funnel in your business that doesn't allow it to flow, because you're demanding on, like, being the funnel, and it has to flow through. And as soon as you get out of the way, like, things can go so much better. So a little bit more.
Yeah, that's a great way.
Yeah. Really good stuff. Wait, let's transition a little bit, Anthony. So got into real estate through all that. I love too that you talked about, kind of being, ADD or whatever. And it seems like that's such a common story. I've had a lot of guests that have described themselves that way, and then they end up in entrepreneurship. So really interesting that, the structure of school and then the structure maybe of climbing the corporate ladder, like, just doesn't fit those people. Maybe you call it ADD, but those just tend to end up being entrepreneurial people. And then what's really cool too, Andy, you talked about, like, learning how to utilize that really as a strength instead of a weakness for you. You learned how to structure your life and structure business, but yeah, just that, like, as an entrepreneur and learning that in business spilled over into life and realizing how to structure your life. And I guess I was thinking of it more like that. You were also probably learning that this thing that maybe kind of felt like it plagued you, the ADD, like, plagued you because you were playing a game where ADD just doesn't do very well, or just the way, what I would say the way God created you wasn't working so well in that. But then you jump over into this arena and you're playing a different game, being an entrepreneur. And suddenly it's like, I can use this to my advantage. And then you start, okay, well, how can I set up my life to use this as a manager? Just not feel like I'm plagued by this. And I think that's great, because we are all made so very differently. And a lot of people maybe are made for, climbing the corporate ladder and being that life and just kind of the more steady, but there's people that aren't. I think it sounded like you were bucking against that your whole life, and then finally found, like, oh, okay, like, I don't have to try to force myself into that. I don't have to try to force my round peg into a square hole. You got some businesses started and you start spinning off some cash flow. I would love to dig into a little bit more of, like, just your mindset of, like, okay, doing really well with the business. Why not just keep doing that? Was it a tax problem? Was it just because you had mentors and you had the foresight to, hey, I don't know everything, so I should have mentors, and they just started talking about real estate? Or why not just keep crushing it in business and make as much money as you can and throw it in the stock market? What was in your mind that really got you to move toward real estate?
These are good questions. I think it's, for me, it's understanding a bit of like my psychology and the way that I get motivated by things. And so the life cycle that I usually go through with a business is I am super in it and psyched for about 2 years, and about 24 months into it, I'm like, all right, what's the next thing?
Sure.
So knowing that about myself, I know that I'm not really the guy that wants to sit and dedicate himself to just building a business over the next 20 years and seeing like how big I can build that single thing. And it took me a long time to realize like that's just part of what makes me unique. And going back to the ADHD thing, what's really interesting is a lot of people will say they have ADHD, and they'll use that as an excuse for why they're not succeeding. Yeah. And for a long time, I did the same thing. And what really like served as the pivotal moment was just looking at ADHD and say, instead of saying, this is why I'm not succeeding, I turned it around and said, this is why I'm going to succeed. Yeah. Right. And it's just that single perspective shift where it goes from being a weakness to now it's my strength. Right. And so I know that my default is I got about 24 good months into me before I start getting antsy and I want to go look at other things. And so as I was building these businesses, one of the things that ends up happening is, yes, your highest return on investment for your time and your capital when you're building a business is just right back into your business, going into hyper growth and scaling mode. That's where you're going to see the biggest dollars. But there comes this point where if you're not diversifying outside of that, then you pretty much have just this one really big golden egg. And you can never really divest yourself from that business fully. Like if you wanted to sell it, that's going to create some issues. If you just wanted to go off on vacation all the time and like, live completely passively, that's going to create some issues. So as I was looking at it, I was like, okay, I want to build a life because one of my highest values is freedom. I want to be free to pursue in the moment whatever I find to be of the highest value. And sometimes that's the business, and sometimes that's family, sometimes that's this other thing, like whatever. I don't know where my whimsy is going to take me, but I want to be free to pursue it when it does appear. And real estate is a way of taking chips out of the business and putting it somewhere safe where I know I'm going to get good tax treatments, I'm going to get good appreciation, I'm going to get cash flow, I'm going to get all those things. But I'm going to be able to continue doing what I do, knowing that that's my safety net, that's my foundation. And in that process, what became interesting is like I was building, a window washing company, then a manufacturing company that did polyurethanes, and then an import company. And like those are all a lot of fun. But then I started, as I started getting into real estate, I was like, well, real estate's really cool too, because they're all just these tiny little businesses. Each building is its own little business. Yep. And so like that scratches that itch of like, what are we going to do this time with this property? How are we going to monetize this? Right. And so that became the business. What started as just another diversification of income stream became like the primary business. And so that's just real, that, life's weird like that sometimes. So that's how I look at it, at least.
Yeah. I totally identify with you, Anthony. I'm definitely like that. And in fact, like even when I got in real estate, my wife was like, I mean, this sounds good, but like, how long do you think you're going to stick with this? Because she knows I'm just like you, but you're right. And especially multifamily, I love it because, I mean, you mentioned 2 years, and that's probably me too, building business, but it does feel like each property is its own business. But I'm the same way. Like as soon as we get one, as soon as we finally get it under, like, or we actually own it, because you're hunting. And I love that part. And then we find it and it's exciting. And then you do all the due diligence. Then we've got it and it's ours, and I'm bored with it. Yep. And I'm ready for the next one, but that's okay. Cause I've got a business partner that handles that side of it, and we can split up. So that's really cool. And I've heard it explained. Someone said like, I was listening to a guy on a podcast, and he's an entrepreneur and in real estate and stuff. And he said he's a wartime leader. He's a wartime president. So he's good at like when things are tough and they're swirling and it's crazy. But then when they're settled down and it's like, now it's just time to just operate. He's like, that's not me, and it sounds like you too. So as you're getting more and more into this, Anthony, you're seeing the benefits of it. I wanted to read a little bit off of your website that I really liked. You said investing is often made needlessly complex by the professionals, the financial advisors, hedge fund managers, the pundits. That's because they want you to believe taking control of your financial destiny is too complicated. They want you to think you need them. The truth is you don't. Whether you're saving for retirement or eager to get rid of your dead-end W-2, there's a better way to invest, a way that you can earn high-risk adjusted returns, quarterly cash flow, and enjoy incredible tax-deferred benefits without requiring an advanced degree in economics. Introducing multifamily investing. I love that. That's exactly what we do here at Threefold. Anthony, that's really well said. So just want to read that and kind of start into this conversation of passively investing in real estate. You also wrote the book. It's behind you if you guys are watching on video, but Passive Investing Made Simple. You wrote that with your business partner, Dan Kruger. Let's get into that a little bit, Anthony. Why do you think passively investing in real estate, specifically multifamily real estate, is so great. Why do you think anybody can do it? I mean, if they're not a CPA or they don't know that much about investing, why do you think they shouldn't just let a certified financial planner handle their money and put it wherever? Why do you think they should go a different route and invest in multifamily real estate?
Well, I think a lot of people want real estate in their portfolio. They realize that it is a powerful asset to own. Like when you look at wealthy families and people who have built incredible amounts of wealth, real estate plays a very important part in that for a lot of reasons that we can go into. So, but people realize that even at a subconscious level, like real estate in a lot of ways can equal wealth. The problem is for most investors, they don't want to do the work. Like they don't want to do the fix and flip that they see on HGTV. Like that sounds cool, but they're busy with their W-2 and they're like, I don't have the time for that. I don't have the desire to learn how to do it. And I don't want to take on the risk associated with it. And the problem I see a lot of investors make when they first enter into real estate is they don't distinguish between what they're trying to do. Most people just want to invest in real estate. And what they end up doing is building a real estate investing company.
Yeah.
And this is where they get really frustrated because they go into it thinking, oh, I'm going to buy that turnkey single family home or that Airbnb rental, and I'm going to outsource the management to such and such company. It's going to be very passive because you hear about this all the time. Passive investing. But in reality, like you have a job. You're the CEO of this little investing company, right? And that starts to take its toll, even if it's a small one initially. As you start to scale, you're the funnel, as we talk about with Tim Ferriss, like you're the linchpin. And so people end up getting burned out and they're like, oh, I tried that real estate thing. It's not for me. I don't have the time. I don't want to do this, whatever.
Yeah.
Not realizing that there are ways to passively invest in real estate. It's just that over the last 20, 30, 40 years, like there hasn't been a ton of information out there about how to do it. Case in point, like when you look at all the books out there on real estate investing on Amazon, let's say 99.9% of them are targeted towards guys like you and I who are active investors who want to build intentionally an investing company. Most people don't want that. And so we set out to write Passive Investing Made Simple to show, okay, if you want to invest in real estate, if you want those benefits of like appreciation, cash flow, tax benefits, all that stuff, and you want to do it truly passively, well, this is the route for you. And so we wrote the book exclusively from that perspective, not saying like, here's how you do what we do. It's saying, here's what you need to know as a passive investor. And sure enough, I think everybody has the capacity to do this and to understand it, because fundamentally real estate is not complicated. It is a very basic business model, right? You have your residents who are in there and you're collecting rents from them. That's your revenue. If you can increase that, awesome. That's going to increase the profitability of your building, assuming that the expenses don't also creep up. But it's very basic, and most people can understand that because they've rented an apartment before. They've lived in a building, so they can understand the economics. The key then is to get over the hurdle of feeling like you're going to make a mistake, because there's not a lot of transparency in this space of syndications where they're private placements. Like that's what they're called. And they're private, which means they're not publicly traded. There's not a lot of reporting that happens. And so there's this fear like, oh, I'm going to be taken advantage of and I'm going to look stupid. And so for a lot of people, they think, well, if I go to my stockbroker, my financial advisor, like at least I'm protected from doing something stupid, because if they do something stupid, I can point and be like, that's them. But the truth is, like, regardless of who did the stupid thing, like you're going to be the one that's paying the price for it.
It's still your money. Yeah.
Right? It's still your money. And so I like this model. I love real estate because if you put in the time, if you read the book, if you listen to enough podcasts, and that's not even that many that you probably need to listen to get like a base level understanding of this, you can do very, very well investing very little time into it. And for the risk reward spectrum that you can fall onto there, I think it's worth everybody taking the time, because money is one of those things that most families didn't spend a lot of time growing, like talking about around the dinner table. Don't talk about investing. We didn't talk about it in school. So most people just generally feel like they're out of touch. Like everybody else somehow knows something that they don't. And they're like, well, I feel stupid asking questions.
Sure.
I don't want people to know about this thing like money, which is so important. I don't want them to know that I don't know what I don't know. And so people kind of suffer in silence. And so the book is an attempt to say, hey, let's come out of that closet. Let's take our head out of the sand and let's take ownership and responsibility of this thing, which is your financial freedom.
Yeah, absolutely. Yeah, I think there is a lot of fear there. And it makes sense just because it does feel more comfortable going with the herd, which is, a 401k that's made up of stocks and bonds, right? I mean, it feels more comfortable, but like you said, I mean, yeah, it may feel less like you messed up if you lose money in the stock market or the bond market than if you bought real estate and lost money because, well, I lost, but everybody else lost. But again, you're still losing. And there's a lot of people that are finding out that exact point this year, right? Where, real estate is still doing very well, especially if it's cash flowing multifamily, still doing very well. And stock market, bond market are down big. In fact, when you look at both of them, they've never been down this much together, right? They usually go opposite of each other. That's why you have the stock bond mix, right? And it's not working out this year. So people are kind of finding that out, but it is more scary just because, again, the herd's not doing it and not many people know about it. But that's why I love that you guys wrote the book, Anthony, because it is pretty simple to wrap your mind around. It does not take a real smart person to understand the income and the expenses and then the money left over. Some of the tax benefits, the fact that you count that income and expenses, but a lot of people forget one of those expenses is paying down the mortgage. So behind the scenes, you're building all this equity, which people understand with their home, right? I mean, I've got these expenses on my home. The biggest one is the mortgage, and you own it for 30 years and you own it free and clear, and you sell it and you have a bunch of money there. And then that's just bigger. But people, I think the big part is they don't understand that they can get into that and get into it passively. And you set that up well too, because even as an active investor, I realized pretty quick, if I'm managing my own properties, I'm going to be building a property management company. Just like you said, most people think I want to invest in real estate, but they end up building a real estate investing company, which is what you and I have done purposely, but people that want to invest passively shouldn't. How do you start to coach people? Maybe Anthony, maybe it's in the book where how do you suggest people go about finding that operator? Because if you start to get comfortable, what I always say to our potential investors is I want to get you comfortable and confident investing in multifamily real estate, because I think it's a great thing. And so eventually I want you to get there because I think it's right. And then you have to get comfortable and confident investing with Threefold or maybe with Invictus. So how do you get people there? How do you get people, or how do you suggest people go about that? Finding the operator, getting comfortable with the person you're going to be investing with, or the group you're going to invest with.
Yeah. And that's a really hard question. And it's the hardest one that you have to answer because
it's important.
Fundamentally, the operator is the most important aspect of the deal.
I agree.
Because like we always say, you bet on the jockey, not the horse. And it's important because if you give lemons to a great operator, they're going to make you some lemonade. But if you give lemonade to a crappy operator, they're just going to spill it on the ground. Right. And then you have it. And so at the end of the day, it's the operator's ability to go in there and execute the business plan that makes it's not how you buy, right? Like you always hear people say, "Oh, you make money when you buy." You're like, no, you don't make money when you buy. You just took on a ton of debt when you bought. Like to get profit, to make a good return, it comes down to operations. And so the operator is the most important aspect of the deal, which puts a lot of onus then on you to make sure that you're partnering with the right groups. So there's a bunch of things that you can look for in terms of like track record, personality, integrity. All those things are super important. But at the core of it, the hardest part is to know, like, how do I really know that I can trust this person? How do I really know they can do what they say? And for me, like, the thing that I tell investors is, like, I don't know if we're the right group for you. Like at the beginning, we need to figure out, like, what's your investment thesis? What is it that you're looking for? And then finding people who are in alignment with that. Because what we do is our product does not serve all investors. We're not all things to all people. We serve a very particular demographic, and we can serve them exceptionally well, which means there's a whole lot of people we can't serve. Right. And so for you as the investor, you need to get clear on what is it that you're looking for? Like, what's your goal? What's your investment thesis? And then be finding groups that fit that. Now, the only way that I know of to really vet an operator and to know through and through that, like, this is a person that you should work with, is to observe them over a long period of time. Because when you ask somebody, like, hey, do you have integrity? Like, what does integrity mean to you? Like, I have never met anybody who answers the question, do you have integrity? I've never met anybody who goes like, nope, I have no integrity. But then when you ask them to define it, like, you start to realize, like, everybody defines integrity in a different way because, and this is important because your operator has a lot of power and control in a deal. And honestly, the biggest risk factor is always going to be that the operator either can't do what they said they would, or they can do it, but they're not going to do it because they lied about it. Right. And so you got to be you have to trust. There's a high degree of trust.
Yep.
And the only way that I know to like really vet that out is to watch them over a long period of time. You look at like family offices and private equity firms that invest like, write $10 million checks. When they're looking at a new operator, they are watching them for 2-3 years before they make an investment. So they're like, I like what I hear. I like your message. I see your guys's deals. Keep us in the loop. We're going to keep an eye on how these perform over the next 3 years. And then if it makes sense, like at that point, we'll make a decision. And that's mind blowing for most people to be like, I don't want to wait 3 years. And I'm not saying you have to wait that long,
right?
But give yourself a long period of time to observe how groups operate. Like, what's their messaging? Is it consistent? How are their deals performing? Not just what did they project, but how did it actually perform? How do they communicate throughout the life of a deal? All those things are super important. And I think they're critical for you to get to the place where through and through, okay, I can trust this person to do what they say. Doesn't mean that they're always going to win, right? Because like real estate and business, like sometimes you lose. Like no batter has a 100%, 1,000% batting average, right? Like quarterback hits every single pass. It's not about like betting on the person who's never going to lose. It's knowing how they're going to respond when they do lose. That's important.
Yeah, right. Yep. Absolutely. No. And you start off, you kind of say like, it's not about making money when you buy. And I think I was just going to say, like, I think most people think that because they think single family, and with single family, that kind of is the case because you have no control over the value, right? The market has control over the value. So it's totally true, or at least more so, because you got to time it. You got to buy, and then everybody's price goes up, and so does yours. And that's it. That's all the control you have. When you have cash flowing multifamily, where you can raise rent, where you can improve operations, where you can decrease expenses, improve efficiencies, things like that, you control it. So it's not just about buying at the right price. It's about controlling it. And it can go the opposite way, like you said, Anthony. So in that light, I always like to wrap up and ask, what's the key ingredient for being a successful real estate investor? Maybe since we're talking so much about passive investing, maybe what's that one key ingredient, Anthony, to be a successful passive investor in real estate?
That's a good question. As a passive, the first word that comes to mind is perspective. Okay. Like perspective from understanding what is it you're trying to achieve, perspective about understanding where are we at any given moment in the market cycle, perspective about what that means and how you need to shift your game plan moving forward. I think perspective is, if you have good perspective, which ultimately can lead to good judgment, then you are going to succeed as a passive investor, because ultimately that's what you're making your money based off of, is like your ability to make good decisions about who you're going to work with and what deals you're going to invest into. And that maybe sounds scary to some people, like, oh, I don't have good judgment at all. Like, I don't know what I don't know here, but it's something that you can develop. And I think it's a very valuable skill, regardless of if you're looking to invest or just in other areas of your life. Because again, going back to the conversation before about you don't lack for resources, you lack for resourcefulness. That's just a shift in perspective. Talking about how you turn ADHD from the thing that's holding you back to the thing that's propelling you forward. It's a shift in perspective. So all very aspects powerful. Of life, just perspective is the skill.
Yeah, really good. Now, flip that question on its head a little bit. So what do you think is the key to, while you're pursuing success in real estate investing or whatever, business you're pursuing success in, what's that key ingredient to make sure you're maintaining your priorities in life, that you're having success outside of that? With your wife someday, with your kids someday, with your family, all that. What's that key ingredient for you there?
Again, perspective. I think truly, like one of my things is I like to help entrepreneurs and investors amplify and maximize their return on life. And that concept of return on life is super important, because some people love working all around the clock. Like that's the thing that lights their soul with joy. And for them, it's like, awesome, cool, do that. Some people, it's like, work is a means to an end so I can spend more time with my friends and my family, living that. Awesome. Cool. It's about perspective. And again, understanding what makes you unique and what is it that you want out of life. Like, what does a fulfilled life look like uniquely for you? It's different for everybody, right? Like, you don't have to play anybody else's game. You don't have to define success how anybody else does. So for you, how do you define it? And once you have that like definition, then you can make sure that you're living your life in alignment with that goal. And so again, perspective, I think, is the takeaway.
Yeah, it's really good. Yeah, I always like to ask for book recommendation as we wrap up, Anthony. But I know you've got the link for the book, the passiveinvestingbook.com. Is that what we should put in the show notes and people just use that link? Is that the best way to get it?
Yep, you can go to thepassiveinvestingbook.com, or like for your listeners, we can make a very, very special offer, which is if you go and leave a review for the podcast, like on Apple or wherever you're listening to this, just drop a review and then shoot me an email, Anthony@invictusmultifamily.com. And in that email, say, yo, I left a review for the podcast and give me a book. I'll send you a free physical copy of the book. All you got to do is drop a review.
Yeah. Thanks, Anthony. That's awesome. I appreciate you doing that. That's good stuff. Yeah, go get the book. Agree with you. Not a lot of books out there, not a lot of education out there. I'm sure almost nobody has been educated on, passively investing in real estate, through school or by their parents, because it's an alternative investment. It's not something a lot of people talk about or know about. But as you mentioned, Anthony, unless you grew up really wealthy, because the wealthy, that's exactly what they do. And so they do know a lot about that. So, hey, might as well play that game as well, at least a little bit, get into that. So that book will help you do that. That's really good stuff. Anthony, before I let you go, this has been really fun. I really enjoyed jumping into even the child rearing conversation. I love those conversations too. I miss the investing stuff. Before I let you go, I always like to ask my guests, how might my listeners and I be praying for you in the coming weeks?
Man, that's a good question. Right now, we're just in the middle of a lot of transactions, closing up a lot of deals.
Oh, so awesome.
Whenever there's closings, it's an exciting time, but it's also a trying time. So
extremely. Yes. Okay.
Let's hope that everything gets done cleanly.
Can be very stressful. Yeah. It's an anxious time. There's so much work. I tell people, like, once we get something under contract, I'm really busy for the next 2 months. It's, it ebbs and flows. So yeah, absolutely, man. We'll be praying for that for you and your team. And that's a lot. So cool. Well, good stuff, man. This was a really fun conversation. You guys are doing some great things there in Invictus Capital. Love the book that you guys put out. And just great stuff here today. So thanks so much for joining us, Anthony. Really appreciate you coming on.
Appreciate it. Thanks for having me.
Yeah, take care.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.